Hi, I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in January in Vancouver, and I'm joined by Paul Cowley of First Vanadium. So, First Vanadium, obviously a commodity that is not the most common at the conference, but one that has outperformed most other metals in the last few years. So let's start by talking about vanadium. Demand is going up because of Chinese requirements. Supplies are restricted. Is that does that capture it?
That's the basic thing, yeah. In 2017 and 18, best performing metal. Constant increase in the metal price just because there's so much demand and restrictions, limits in supply, and those limits are even continuing with shutdown of mines in China and in South Africa, and the demands in a little bit more into the battery sector, which is new, and new demands in intensity and use of vanadium in rebar.
And this is the thing. So vanadium's primarily a steel story.
It is, yeah.
98% of it or something goes into steel, and that's the big thing that happened, especially in the second half of 2018, is Chinese steel requirements.
That's right. Yeah, there was a law that came into effect that Chinese rebar manufacturers had to put 30% more vanadium in the rebar because they were producing inferior steel, and there was collapse in buildings and bridges that they'd built with that inferior steel.
Right.
So that's now there's a bigger need for that vanadium. It's basically brand new demand.
Right.
That's come in.
Yeah. So regardless almost of your outlook on global economic growth, as long as it keeps chugging along, steel demand will continue to chug along, and there's this extra impetus from China requiring more vanadium per ton of steel.
Yep. And all the infrastructure projects, all of this rebar goes into big infrastructure, and there's trillions of dollars of infrastructure projects in Russia, China, US. Those are all going to be needing more vanadium, more than what's needed.
Absolutely.
Or that's being provided.
More than what's being provided, especially
so
after.
We see that if you look at the graph of vanadium prices over the last 3 years, it's been pretty steady, except in September, October, it shot up, and there's been a natural pullback. But it's now leveling off at a place where the graph, if you were to take out that,
would just have carried on.
Just carry on.
Yeah.
And so those strong fundamentals of strong demand, restrictions in supply are still there.
Absolutely.
But now you have to realize that that's the ongoing game here.
Yeah.
And that there's changes all in the fundamentals of supply and demand have changed quite significantly before because of dirty mines being shut down permanently in China.
Yes.
For example, or scrap waste being banned coming into China that was a source of vanadium. Things like that.
For sure.
Yeah.
Okay, so good-looking vanadium market. Let's talk about your project.
Yeah.
Let's give you the challenge of, as quick as you can,
Wow.
What are the things that stand out about the asset that you're working on right now?
Standing out, the location and infrastructure, because we're right basically in the Carlin gold trend of Nevada. So it has all that infrastructure. We're 6 miles by road to Carlin and a major rail hub. Power, communities that are mining based, a jurisdiction that processes mines, right? That permits mines, rather. And then the technical aspects of our project being near surface, fairly flat lying, and very, very good grades at surface over a large area. So that this is a primary vanadium deposit that's black shale hosted. So it's really vanadium. There's a little bit of silver and zinc in it, but it's primarily vanadium.
And let's talk a little bit about grade. People probably aren't very familiar with vanadium grades, so talk about what the grades sort of are or are becoming in your estimate, and you often relate those to gold grades just so people have something to hold on to.
Yeah, it's helpful. So there's a historic resource that was based on the Union Carbide drill holes that were done in the 60s, and that was a 43101 compliant resource of 28 million tons of 0.52 V2O5. That's meaningless for most people, but if you were to convert that to a gold deposit grade, that would be a 5 gram gold deposit at that tonnage, or a copper deposit at 3.5% copper. This is big.
Yeah, these are high grades for vanadium.
And some of the intercepts we're getting are up to 10 grams of gold equivalent of vanadium. So, and starting from surface.
Right.
We had an intercept that we just reported that was 73 meters, starting right at surface at 0.6 That's the equivalent of 5.7 grams of gold
Right.
coming right from surface. Big.
Yeah, for sure.
But it's, yeah, you have to convert it to something that people can relate
What, not
to.
everybody knows about vanadium?
No.
You've been doing lots of drilling, and successfully so, getting some good grades, filling in some gaps in this sort of strangely shaped resource. There was
Yes.
obvious opportunities
Yes.
for expansion. So that leads us to what's coming up for this year. There's sort of two main goals that you're working towards for this year.
That's right. Yeah. So we've completed all of the 2 drill campaigns. We've done now 89 holes, adding to the 127 holes. So there's 216 holes now in the deposit. Very sizable, closely spaced drill pattern. So we're looking at having a resource calculation for our own come out in the first 2 weeks of February.
Pretty
And
soon.
we're looking at it with that spacing to bring a lot of that historic inferred resource into a sizable percentage of indicated. We've demonstrated that we've infilled to get that category boost, and we've also pushed out the edges of the deposit and extended the mineralization. And so those will be advantages that'll go into this new resource calculation.
And then after that, you want to
Then-
wrap some numbers
Yeah.
around this thing and see if it makes
Well,
sense.
metallurgically, we're doing well too. We've got between 80 and 95% of the vanadium coming out of the rock through our preliminary metallurgical test work. We're still going through that to get the best combination of operating costs and capital costs to recoveries. And then once we've got that locked down, then we're wanting to go to a pre-feasibility, because we think with this kind of value, it should make sense to just push towards a pre-feasibility.
Absolutely.
And then you bypass the PEA, which the numbers are generally pretty rough. A lot of people don't, financiers don't value PEAs very much. It's a lost time, lost money. So we'd rather just go right to a pre-feas is what our aim would be for 2019.
So busy year
Very,
ahead,
very
trying
aggressive
to get the numbers both for the resource and for the pre-fees done. While you're capturing this strong vanadium market, you're going to be busy.
Yeah, and we're hoping that we can do some more drilling as well, maybe in the earlier parts of the pre-feasibility when we have got a permit to do more drill roads.
Gotcha.
And so we expect to have more drill results as well. So it won't be just resource calculation and have to wait 6 to 8 months to get a pre-feas delivered. We expect to do more drilling as well to add to that, to update a resource that'll be in the pre-feas.
Gotcha.
Yeah.
Well, thanks for
We're very
giving us
excited about
the outline of the story, and I look
Thank you.
forward to keeping up with the news.
Thank you, Gwen.
All
Thanks for
right.
having me.
Thanks.
Bye-bye.